What are brokered CDs? If you are curious about what brokered certificates of deposit are and how they fit into your financial plans, you are in the right place. Let's break it down. Brokered certificates of deposit are a special type of certificate of deposit that you buy through a brokerage firm, not directly from a bank or credit union. This means that while the certificate of deposit is issued by a bank, the purchase happens through a brokerage, which can offer you more options and competitive rates. So how does this work? Brokerage firms typically buy large amounts of certificates of deposit from banks. They then split these into smaller portions for their clients. This setup gives you more flexibility when it comes to the amount you invest and the terms you choose. One of the standout features of brokered certificates of deposit is their ability to be traded on a secondary market. This means if you need your money before the certificate matures, you can sell it instead of facing penalties for early withdrawal. However, keep in mind that selling could lead to a loss if interest rates have risen since you purchased it. When it comes to interest payments, brokered certificates of deposit usually pay interest into your brokerage account. This is different from traditional certificates of deposit, where interest is often compounded within the account. With brokered certificates of deposit, you will need to reinvest the interest separately if you want to keep growing your funds. Brokered certificates of deposit often offer higher interest rates compared to traditional bank certificates of deposit. This is because they operate in a more competitive market. You will also find a wider range of terms and options available, which can be appealing if you are planning for your emergency funds. In the context of emergency funds, brokered certificates of deposit can be a smart choice. They allow for higher returns while still offering some flexibility to access your money if needed. However, it is essential to weigh the risks of selling on the secondary market against your financial goals. For banks and credit unions, brokered certificates of deposit serve as a way to reach a larger group of investors. They can offer competitive products without managing each certificate directly. Even though they are not as hands-on as traditional certificates of deposit, they still provide a secure investment option with federal insurance. So, if you are considering where to place your emergency funds, brokered certificates of deposit might be worth looking into. They can offer a blend of security and potential growth, making them a fitting choice for your financial strategy.